Hi there. This is Christian Dy from Latitude West Financial, and my co-host is Mike Stewart from Oakland Realty.
Good evening,
And we're
everyone.
here. What's that?
Sorry. I said
Go
good
ahead.
evening, everyone. Sorry about that.
Yeah, no, we're here today, and our topic of discussion is pre-construction condos here in Vancouver, the Lower Mainland, and outside. We're looking to see, is this still a good investment opportunity? Interest rates are going up. We're going to talk about that. What is the environment like? Which direction are we going with real estate in general? We will leave questions till the end. And then what we hope to do is to give you guys as much value as we possibly can. And then we will share contact information if you've got any follow-up questions. So quick disclaimer, the information given today is not to promote the buying or not buying of any real estate. We advise that you do your own due diligence. We are being just showing this for educational purposes only. But of course, we invite you to connect with us if you would like more help. So I want to dive right in today. What is the real estate market outlook in general for 2023? So, Mike, I'm going to shift it over to you to give us your expert opinion.
Yeah, thank you. Yeah, so the real estate market is very interesting. We're in a situation of rising rates, which most people associate with a falling real estate market. But the reason why the Bank of Canada is raising rates is because the real estate market is still extremely active. Now, if you see with this slide here, you can see detached homes, 28.5%. That number is called the sales ratio. So that's the percentage of units or houses that sell in a given month. So 28.5% of houses have sold in May 2023. Now, when we have a sales ratio over 12% for an extended period of time, when we have a sales ratio above 20% over 12% over an extended period of time, you see prices rising. And as you can see, for detached homes, we got 28.5%, townhouses 45%, and condominiums 45.5%, for a total of 38.4%. So we are in a seller's market in the Vancouver market, and those rising rates don't seem to be slowing or stopping.
No, and this is such a good indicator when people ask, well, which direction is it going, and how do you know? This over here is pretty much bang on because it's talking about how there essentially isn't enough inventory for the amount of people that are wanting it based off of the percentages. So inflation, Mike, talk to us a little bit about, the hot topic.
Exactly. So we're in a situation right now, an inflationary situation right now in Canada and in British Columbia and in the Vancouver real estate market, something we haven't seen in 40 plus years, and it has changed everything. So I've got, the economics definition here, but simply put, it's just more money chasing the same number of things and a devaluation of the dollar in your pocket by the inflation rate. Okay. So what that means is, your dollar doesn't go as far, but if you own something and you own something of value, it's going to be worth a lot more of those dollars.
Sure. Okay.
Yeah. And so, the causes of inflation in BC are, surges in commodity prices due to COVID-19, conflict in Europe, pushing oil prices up, all these sorts of things. This creates demand in the economy, which pushes up inflation. Now, we're looking at unprecedentedly high levels of immigration in Canada currently, close to 1 million people in 2021, 2022, and looking like we're going to have the same thing in 2023. I think this is a great thing, and I think immigration is very good for this country. But the issue is, if you go down to the next point, the federal government is spending more than it's taking in. So the federal government and the provincial government are both running big deficits and stimulating the economy at a time when we don't need this stimulus, because it's causing inflation. Okay. And that's pushing prices up. It's pushing prices up for everything, including for real estate.
Yeah, I think the last statistic that I came across was that essentially we would need to have add another 50% to the current amount of housing starts, which pretty much is impossible, in order to accommodate to the amount of immigration coming in. The only real kind of solutions are, potentially play around with zoning, get more, more higher density on lots. But, that's also a slow process because who's going to build all of this? There's a shortage of labor. But I think the real point over here with inflation as well as the immigration is that there can be absolutely no doubt in anyone's mind that real estate prices are going anywhere except for up. It's a supply and demand issue. There is not enough supply for the amount of demand. For the immigrants who are coming, many of them are post-secondary educated. They're going to want to buy housing themselves. They're going to, so it's not just a rental issue, but it's also wanting to buy themselves.
There was an interesting report from the Fraser Institute where they mentioned that Canada and British Columbia created more housing units between 1970 and 1980 than we have created in the last 10 years. Between 1970 and 1980, we had significantly less population growth than we have had in the last decade. So, there's a lot of talk of the housing crisis, and I wouldn't disagree because you're starting to see rents go absolutely crazy. Like, for example, we're going to have a slide that should show a little later, but we're looking at, so here we go. Canada built more housing in the 1970s than the last decade. And so we've had a chronic undersupply of housing while we've got the population just growing and growing and growing. And the issue, quite frankly, is government. The provincial government has come around to it with some of these measures to increase supply. And I'm hoping that will work, but they require the cities to buy in. And if the cities don't buy in, then the province has to intervene, which slows things down. There's going to be disputes. So it's uncertain whether or not we're going to be able to get that supply. Now, the thing that I find fascinating here is, according to CMHC in 2022, BC needs to build an additional 570 houses by 2030 to restore housing affordability. That's 71,000 homes per year in British Columbia. Now, in 2021, BC broke records for building the most houses that have been built in recent memory, and it was only 55,000 homes. So we still have a shortfall, about 16,025 new homes to make up for the amount of new people that we have coming to British Columbia. And that's also from these numbers, a lot of these numbers are from prior to COVID-19, back to, and you can really see it here, like this chart is from 1977, and you can absolutely see, during the 1970s, 1980s, the numbers are fairly flat because building was relatively easy. As we got into the 90s and the 2000s, the regulatory burden on home builders continue to grow. They're doing good things. They're increasing environmental standards. They're, doing all these good things. But the thing is it increases cost and it makes it more difficult to make more housing. And so the reason why we've seen incredibly high real estate prices and continually rising real estate prices is a lack of supply. But inflation I guess is going to make it worse. Sorry, go ahead.
I was going to note one thing, because often people will talk about a crash or, are the prices ever going to go down? And the answer is, in the short term, they do. They're blips, but this graph shows that every blip is short-lived and then it shoots straight back up.
Totally. And
and that's an opportunity to me.
Housing is not going to get cheaper in British Columbia. It's not going to get cheaper in Canada because the creation of new housing is always getting more expensive. The construction industry is the business that is getting hit by inflation right in the teeth. Their labor costs are going up, their material costs are going up, all of their costs are increasing. So if the cost of new housing gets too high, there's two things that are going to happen. One, you're going to have less housing because the builders won't build because nobody can afford it. Or two, you're going to just have more expensive housing. Either way, that means less housing. And it's inflation that's causing that. But anyway, I'll let you continue.
Yeah, and I guess a lot of people are trying to wrap their head around rates and yes, I think everyone agrees that real estate is going up. Everyone agrees, there's going to be a shortage in housing, but from an investor's point of view, we want to tackle that question: should we be investing in real estate? Is it too expensive? What's happening with inflation? So, Mike, why don't you give us your opinion on this one here? This is
an interesting chart, and I like this one. So the solution that I see is a pre-sale, and here's why. So if you look at this chart, okay, starting 2013 to about 2020, inflation was fairly stable in the band where the Bank of Canada wants it, right around 2%. Okay. Then we had the COVID-19 epidemic. It went down. And then after COVID-19, because of all this deficit spending, because of all the supply chain bottlenecks and whatnot, inflation surged. Okay. And inflation rose, and the Bank of Canada started raising rates. Okay. Now, investing in real estate at a time when rates are high is challenging, and it's hard. And it's hard if you have to pay 6, 7, 8% for a mortgage. But the good news is inflation is going down, as you can see, starting in the middle of 2022. Inflation's on its way down. Inflation's currently in Canada about 4.4%, and it is on its way down. There was a little uplift. You see, there's a little uplift there, and that's why the Bank of Canada raised rates in June, and they're probably going to raise them in July. But the nice thing, and this is of course my prediction. Okay, everybody has their own. My crystal ball is as good as yours. But the way I see it is inflation is on its way down because the Bank of Canada is raising rates. So what you can do is you can buy a pre-sale now, okay, and complete on it in 2 to 3 years' time. And that takes us to our next slide, which talks about some of the forecasts for interest rates. So you can see that in Q2 2024, you're probably going to start seeing interest rates coming down. So if you buy a pre-sale today that completes in 2 to 3 years, you're marrying the price, but you're dating the rate. Okay, so basically you buy now when a lot of people can't buy or don't feel comfortable buying, because markets are moved by people's opinions. Okay, they call it animal spirits and confidence. And so people are feeling not confident because interest rates are going up, and they feel interest rates are going to go up forever, and they don't, because interest rates don't go up forever. Okay, they go up and they go down, and I think they're going to go up and then they're going to start going down, because you can see from the previous chart that inflation rate's going down. So you buy now when a lot of people can't buy or don't feel comfortable buying a pre-sale. You wait, you complete on it when interest rates are lower. You marry the price, you date the rate.
Yeah, no, I like that, because here this is a current mortgage rates. Prime just went up another 1/4 point in June. It's predicted to go up another 1/4 point in July, and people are really freaking out with these, especially if they're a variable rate mortgage right now. And is it but we are heading down. Like, inflation was at a peak at 8.6, and now it's at 4.4. It is absolutely trending down. But at the same time, will the value of real estate continue to go up? And I 100% believe that it will. But even more importantly, will rental rates continue to go up? And this is a great chart showing the insane rental rate increases. 1 bedroom in Vancouver, the average has gone up 19.9%. Year over year from last year, and the 2-bed has gone up 24%. So Vancouver is leading the country in not only high housing prices, but also high rental rates, because we have a supply issue, and it just gives you so many more options when it comes time. Okay, you buy a pre-sale, or you buy a piece of property. And then it comes time to rent. I don't think there'll be any issues with being able to rent it out.
Absolutely. And the nice thing is you're going to get significantly more rent, because inflation affects real estate. Real estate is beautiful in an inflationary era because it's totally and completely linked to the inflation rate. Real estate prices rise with inflation. Rents rise with inflation. And we're seeing that now. Okay. So if you see the second point here, real estate prices and rents increase with inflation. Right now, for a new, nice condo in downtown Vancouver, that's going to cost you $3,000 a month. That's shockingly high. And that is because of inflation, coupled with high levels of immigration, coupled with chronic undersupply. Okay. So then basically the Bank of Canada is raising rates to get that inflation down. But the one thing to think about is inflation's like a ratchet. Inflation doesn't go up and then prices go down, because that's deflation. The prices just go up and they stay there. And basically what you have to wait for is for incomes to catch up, and for all these, other sort of sources of income, they're basically for income to catch up. So, I would not expect real estate prices to go down, and I would not expect rents to go down. The nice thing about this from an investment perspective is you buy a pre-sale and you're looking at rent inflation of, say, 10% a year. You buy your pre-sale now and it's going to be, $2,000 a month. Well, you think rent's going to be $2,000 a month. In 2 years' time, that could be $2,400 based on present trends.
Yeah, Yeah, absolutely. And I think this is kind of leading towards this next discussion, and I was going to talk about it in my section as well. And that's, like, who likes the volatility of the stock market? Who likes we're getting GIC rates at, let's say 5%. You think that's a smoking good deal, but, not when inflation is high. But you want to correlate against an asset that moves with inflation and actually beats inflation as well, which is why I like the idea of investing in pre-sales, the right type of pre-sale. So that kind of leads us to your idea of marry the price and date the interest rate. You can
Yep.
expand on this a little bit more for those.
Yeah, so this is something that I absolutely love. You marry the price when you buy a property, but you're only dating the interest rate. So you get married, you don't get divorced. That's a bad thing to do. As a financial planner, I think you'll agree with that, Christian. Now, with the interest rate, you're dating. So if you don't like your interest rate, you can always change it. So, if you're in a situation of falling interest rates, you can get a variable, those rates will go down. Or if you like stability, you can get a 1-year term and then wait for a year. And then if rates are lower, then you can refinance at a lower rate. Okay. That's the nice thing about buying property is you buy in, but the financing is not set in stone. So I absolutely love it. And again, when you've got inflation, it's pushing up rents,
Sure.
Yeah,
and while we're on the pre-sale topic here, Mike, I'd love to hear, you are kind of the pre-sale guru of the Lower Mainland over here. You and your very large team have got so many of these incredible pre-sales that come up. And I don't want you to talk about all of them, but I just want you to talk about a couple of them where you kind of see some really, really good value. And then I'm going to sort of push you a little bit to ask why. Like, give me the area, give me the name of the building, give me whatever you're willing to share. What are some areas and some of the products that you and your team are involved in?
Yeah, so we cover the entire province of British Columbia. So we work on anything from Curve in downtown Vancouver, which basically prices about $1,800, about $4,000 a square foot, all the way out to the Fraser Valley. For example, my colleagues in the Fraser Valley were working on Unity, which actually just sold out just now. I just saw on our one of our text threads that it sold out. So they had options starting at about $399, very attractive for investors. A lot of our clients who are buying in there are buying for exactly the point that I'm making. They know that in future rates are going to be, they know inflation is going to be higher. They know rents are going to be higher. And the thing I like about the suburbs like the Fraser Valley, Surrey, and also not suburbs like the Okanagan is those markets are affordable for new immigrants. What you're going to see, maybe 30 years ago, when new immigrants would come to Vancouver or British Columbia, they would start in Vancouver and then they would move out. Now, because of the price point being so high in the core of the city, immigrants, and also because immigrants feel comfortable living in the suburbs, and there's large communities, pre-existing communities that share language and ethnicity with these groups in the suburbs already. A lot of these people are going directly to the suburbs. They're going directly to Surrey. They're going directly to Langley. They're going directly to Nanaimo. They're going directly to Chilliwack. And from an investment perspective, one of the things that I really like are, basically Burnaby, Coquitlam, East. Okay. East Vancouver is good, but East Vancouver is turning into an end user owner occupier market. Whereas for investors who are looking for something for an investment portfolio so that they can get good returns. And the thing I like about the Valley, the thing I like about Surrey, the thing I like about the Tri-Cities is you're getting properties that are less expensive in the core of the city, but your rents are not that much less. So what I like for pre-sale condo developments in the Vancouver region and the Fraser Valley is anything on or near a SkyTrain. SkyTrain's going to Langley, which is going to be very powerful. Okay. SkyTrain is in Coquitlam, SkyTrain is in Port Moody, SkyTrain is in Burnaby, SkyTrain is in Surrey. So I like properties on SkyTrain. I like pre-sales that are 2 to 3 years out in a market like this. And even in Burnaby, we can get very, very, like for example, O2 has some options there that's some studios starting in the low 5s, which are quite attractive. So there's a lot of very, very good options. I like City of Vancouver for owner occupiers. I like the rest of the region. I like the rest of the province for investors. So I think that's where it's at.
Are any of them short-term rental potential or
100%.
Airbnb, like qualified.
Totally. Penticton, Kelowna are allowing a lot of buildings that allow Airbnb, and you're looking at very, very high cap rates because those places are based on vacation rentals. There's not enough hotels to support all of the tourists who want to move there. So basically, the cities are saying, we don't have enough hotels. We want more people to visit. So they're allowing new pre-sales to have Airbnbs and furnished rentals grandfathered in on basically you have it in writing that you can Airbnb it. Some examples were the Bertrand building and that kind of thing. So, there's some great there's some great options. And I like that because you get a very high cap rate if you can do a furnished rental. You can't do it in the Vancouver region. It's difficult in the Vancouver region. I wouldn't recommend it, but in the Okanagan, I absolutely would.
Yeah, and one of the things that I like about it as well is that people, they might vacation there themselves. They might be able to use these properties themselves, and they're thinking, oh, I would always thought of having a recreational property out in the Okanagan, but now with this, and I think that people, you might have a family of four, and you might think, oh, I need a 2-bedroom condo, but those things are, let's say, in the whatever sevens, or but you could have a studio, you could have a 1-bed and easily fit 4, because it is kind of that Airbnb model. And then it rents. Like I've done the analysis for my clients, and I kind of find that even the studios and the 1-beds have really, really, really good returns, because they're almost being used as a bit of a hotel room, as opposed to, you're not living there. You don't need all of that space of a 2-bedroom condo for 4 or 5 people.
Totally. And when it comes to choosing the pre-sale to get, always get the cheapest, simplest unit you can, because people don't pay extra for views when it comes to rent. People don't pay extra for big decks when it comes to rent. You want cheap, simple, small. You're not buying for your ego, you're buying for what is going to have the highest return on investment. And that is small, simple, inexpensive, high quality, and air conditioning if you can get it, and close to SkyTrain if you can get it.
Mike, talk to me about the floor levels, because the price tends to go up like 5-10 grand per floor. Do you think, if you're an investor, if you're living there and you want the view, yes, but if you're an investor, would you recommend low floor?
Yes, absolutely. Yep. Lower floors are better. You don't get a rental premium for being higher up in the building. You don't get a rental premium for having a view or no view. Or you do get a rental premium, but the amount of purchase price premium you pay dramatically outstrips it. Get a beautiful view for something you want to live in. Okay. Get a big deck for something you want to, you'd like to garden or you'd like to barbecue. Get that for yourself. But for investment properties, keep it simple, okay? Simple, new, high-quality buildings, because what you want to do with these units is you want to complete on them, and then you want to set it and forget it. So you get a professional rental manager that looks after it for you, okay? So you don't have to deal with anything. You collect your checks, you collect your rent, you pay your mortgage, you pay your maintenance fees, you pay your property taxes, and then you don't do anything else. The rental manager deals with all the hassles. Something goes wrong, tenant does something wrong, tenants are being weird, rental manager deals with it.
Yeah,
too busy for that stuff.
This is a good transition into my piece about the financial planning, the creative financing behind it. But to take a step back over here to talk about my company, Latitude West, our philosophy is so different for a financial advisor, because we, of course, believe in investing in real estate. We want our clients to invest in real estate, not just exposure to the stock market. I think everybody's got too much. And of course, they've been feeling it these last couple of years with all the volatility and the down market. Whereas clients who have an integration of real estate with some stock exposure, but not stock reliance. And then what's even more important is this idea of having a reserve. And with our clients, we show them how to create that reserve. It's not just cash, it's other asset classes that we could leverage off of. And so what we do is we take a look at a family or a company's overall situation, license in investments, in insurance, but on the right side of a quadrant, it's the planning, it's the real estate planning, it's the investment analysis of the real estate, and it's the showing them of new opportunities. And so we can't emphasize enough at how before you max out your RRSPs and RESPs and things like that, we should really be checking to see how this stacks up against just buying more real estate for those who are already real estate investors, and those who aren't real estate investors, moving them along and saying, hey, I've got 70K and I was just about to put in the stock market. Well, how does this stack up against a pre-construction that doesn't complete for another 2 years? How does it stack up if I decide not to flip it and instead I decide to hold it? Will this beat out my RRSPs? Or if I just had a child and I was going to max out their RESPs for the next 18 years, does that make sense? Or should I think about creating a real estate portfolio and using that in order to fund their education? So I always invite people to connect with me and my team so that we can actually do this analysis and compare, because we believe that you will make significantly more with our asset allocation, and that is the integration of a minimum of a third of your assets being put into real estate, such as pre-construction, and no more than about a third being put with exposure into the stock market. And we've always shown that it's shown higher rates of return. For those people who are incorporated, you've got even a greater challenge. Corporate tax rates for dividend paying stocks, for GICs and bonds, as well as for, mutual funds, are incredibly high inside of a corporation. So does investing in real estate inside your corporation make sense? And I practice what I preach. It makes more sense. It makes even more sense, especially if that real estate is intended to be held for a long period of time, because there are different ways that you could access the cash without having to sell it and pay the high lines and pay the taxes. So I wanted to kind of land on some creative financing options. So one really easy one is a line of credit. For people who own a home and they said, okay, I'm thinking of buying a pre-construction or another rental property, does taking out a line of credit against your existing asset make sense? And the answer is maybe. Depends on the rate, depends on your situation, depends on if you could afford the cash flow, if there's some negative years, which is why a real estate focused financial advisor such as myself would be a person that we can calculate to see, does that make sense? And we could even get more creative. What if you don't have your first home yet? So you don't have a line of credit, but maybe you have access to one. Maybe your parents have one. Maybe your parents' home is paid off and you might want to joint venture with them and bring this idea of, you leveraging off of their line of credit, buying some real estate, you servicing the interest while you might be for a time period of negative cash flow. But remember, it catches up and that interest could potentially be tax deductible. If you're incorporated, there's the strategy of building wealth inside the corporation, such as through estate bonds, then leveraging out of those estate bonds and buying real estate. And is it possible to bypass the dividend tax rate in the corporation so you could buy it personally? Yes, there are strategies. You just got to be working with a real estate focused financial advisor to help to show you what those strategies are of using corporate dollars to invest in personal real estate. And then there's the big one, which is a IFA strategy. It stands for immediate financing arrangement, where you're actually revolving the borrowing and leveraging off of the investments on an annual basis. So I don't want to go too far over people's heads, but I do want to invite them, if they want to explore either personal strategies or corporate strategies a little bit more, my team and I are absolutely able to connect with you to see what fits your situation. We have 3 big commitments at Latitude West. Number 1 is we present qualified current opportunities that are investment ready. They could be a pre-construction for Mike and his team. They could also be an opportunity investing in real estate out of province. We analyze real estate across the country, as well as in the US. There are certain states that we do, as well as Airbnbs in Mexico. And we have the teams and as well as the connections to help people to figure out whether these make sense. And if they decide to move forward, we would set them up with the right people who can make that happen. Second thing we do is we commit to creating a foundation of ongoing communication. We stay with our clients. If they want us to consistently meet with them a couple times per year, showing them different opportunities, and we always create sort of an invitation to connect with us whenever you come across something for us to analyze. And we, of course, have our professional networks. And this is the accountants, this is the lawyers, and they're all also real estate focused. So no one is ever going to tell you to not invest in real estate. This is what, we do. And just a quick sample of how we analyze. This is a property that we were able to help a client with out of province. It was a multi-unit, which is why the price point is so low. But this was one of those things that they could not have found on their own. The deal went quite quickly. When we did the analysis, it showed a cash flowing off of a 20% down payment right away. We were able, through our financing partners, to get them as high as a 50-year amortization, which is unheard of. And when we took a look at, what would their profit be over time, we're looking at an internal rate of return, IRR, of double-digit growth, which you are never going to consistently get in the stock market. And we were looking at cash flow from the very, very first day of purchase. That's very, very tough to do. But it is possible. And how do we do this? We look to see, how does this incorporate into your retirement? How does this incorporate into your overall financial plan when it's mixed with, your wife, your kids, your CPP and your current RRSPs? Are you on track for retirement? And how much better does this put you in a position of? So we always invite people to connect with us when they're looking for a real estate focused financial advisor for your current situation, to try to figure out, does a pre-construction make sense? Taking out a line of credit, shifting my TFSA money into buying a property. Does any of that make sense? You want someone who's not biased either direction. You want somebody who knows what they're doing, especially on the real estate side. So with that, one of the things I'd like to do is, Mike and I have discussed multiple opportunities and multiple ideas here. Now is the time, if you have a question, I will moderate it, to please put it in the chat. And whatever the question might be, there's no silly questions, especially if you're a bit of a newbie to real estate investing or pre-construction. Feel free to ask. And then just put it in the chat, and then I will field it. While we're waiting for that, Mike, I've got a couple questions for you. Are you ready for me?
Absolutely.
Okay. So in terms of the pre-construction, is it a pretty standard 5% down upfront, or is it 10? Is it 10-5-5, or is it 5-10-5?
It really depends on the project. It depends on how stable it is. And I just wanted to acknowledge Jennifer Stewart, that I heard your question, and I will answer it right away after I answer Christian's question. And thank you for the question. So yes, so typically the pre-sale condo deposits are about 20%. Sometimes they'll be 25%, sometimes they'll be 10%. And it really depends on how long it is until the project completes, how long and sort of what's happening with the market. If the market is rising quickly and everybody's very confident, then a lot of developers may go with a lower deposit. Or if the project is mostly sold out and it's close to completion, then you may see lower deposits. So yeah, there's that. Also, if sometimes deposits are up to 30% for non-resident buyers. So it really depends on the individual, and it really depends on the project and what it is. So let's start with Jennifer's question. What do you think of pre-builds in downtown Victoria? I love them. I think they're great. There were a few buildings in downtown Victoria that allowed Airbnb, but they're no longer allowing that, which is kind of a pain in the backside. But yeah, downtown Victoria is really good. It gives the sort of lifestyle of Vancouver, but without the hustle bustle, and I do like it. And if you want me to connect you with my colleague who focuses on Victoria, he can definitely give you some good pointers and point you in the right direction and help you with something right there.
I'll while we're answering the questions, I'll absolutely put our contact information over here, Mike. I know I personally just came from Victoria last month, and the Airbnb model there seems like a slam dunk, because the rates aren't that different than Vancouver, but the prices are.
Totally.
So
Yeah.
for an investor, it's not a bad idea at all. And again, it's kind of like it lags, like, those Victoria's pricing is what Vancouver's was, 6 years ago. So when you kind of take a look at this Airbnb model, where is it going to be in 6 years from now? And, these crazy prices of Vancouver, I absolutely believe Victoria is not going to be far behind from matching our numbers as well.
And I particularly like Victoria because it's very stable. It's a government town. Yeah, and you bring up a good point. Lower prices, but rent's almost as high. I got a question from Madge. Thank you for the question. So their question is, I want to invest in pre-construction condos, but I don't want to hold it until it completes if rates remain high, as it's too risky for me. Is that a good investment idea given the lack of housing? Madge, what I would do is I would check in with Christian first to get a snapshot of your financial picture and to look at, how much risk you can tolerate. Because one thing I always suggest to people when they're buying a pre-sale condo is if you buy a pre-sale, you should be 110% certain that you can complete on it.
Yeah.
Because it is possible to sell a pre-sale condo before it completes. That's called an assignment of contract, and I specialize in that, and I do it all the time. And I've got one under contract right now. But the developer does not have to allow you to assign it, and they also don't have to allow you to put it on. They can say you can't put it on MLS, you can't put it on your website, you can't do anything with it. So I would not buy a pre-sale with and bank on the fact that you can assign it. I would buy a pre-sale and be certain you can complete on it. And if the market rises or if your lifestyle changes, then we can try to assign it. But I would never, ever buy a pre-sale with the expectation that it would be 100% certain for you to assign it. So that's why I would talk to Christian, because there are other options that may involve lower risks, lower risk. And so that's what I would do. Owen Lowe had a nice question for Christian.
Yeah. I'll read this one over here. It says, can you elaborate on the benefits of buying real estate in a company? Isn't the corporate income tax rate very high on passive income? So the quick answer is yes, it is. But there are other strategies in order to try to compensate for this. So that's one quick answer. The other one is because the type of operating company, I deal with a lot of physicians, a lot of dentists, a lot of people, small business owners, they're incorporated. And so their marginal tax rate is quite high. So to invest in a piece of real estate, the 11% tax rate in the corporation, they essentially have to earn $1.11 in order to invest $1. Whereas if you try to buy it personally, typically you have to, earn about $1.40, $1.35 to invest that same dollar. So if we can do it through the corporation and then have a structure in place to minimize or defer out the taxes, that's why I say there are some benefits. There are also some strategies where you can actually invest through estate bonds or through a type of a portfolio where we could actually borrow against the collateral to get the money out personally and then buy the real estate personally. So there are strategies. We don't have enough time today, but I do invite you to connect, and then we could discuss these strategies a little bit more. The next one from Peter.
I can answer this one.
This is for you.
Yeah, you know what? You don't need to be pre-approved for a mortgage to buy a pre-sale.
I'll just read it out. I'll read it out first.
But you should. Okay. Yeah. Sorry. Go ahead. You read it, and I'll answer it.
Why is there a requirement to have mortgage pre-approved when possession is 3 to 5 years in the future, and your financial situation will be different when it's time to take possession? What are strategies to get pre-approved?
So first and foremost, if you're going to buy a pre-sale, always get pre-approved. You don't have to, but it's something that I strongly recommend. But there's no requirement from the developer. There's no requirement from the provincial government. There's nothing in the legislation, but you should do it because I approach this, Christian approaches this from the perspective of safety first. Okay. So you want to make sure that you get pre-approved when you buy a pre-sale because you want to make sure that you can complete on it. I hope that answers that question, Peter. If you have
and that answers the other one. Do you have to get pre-approved immediately or upon completion? Essentially, you're saying, Mike, you should get pre-approved now to make sure that you will qualify, but technically it has to be upon completion.
Yeah, well, get pre-approved even before you buy a pre-sale. Always, before you go shopping, know how much you can spend. Don't go shopping and then go, oh, what can I spend? So get a pre-approval now. If you're thinking about buying pre-sales, it doesn't cost you anything. You just submit documents. That's it. And then you can buy with comfort and confidence. So do get pre-approved, not a requirement, but I strongly recommend it. I'm going to answer Corrine's question. Hi, Mike. You mentioned when buying, get the cheapest, smallest unit. Mind blowing. I would have figured the baby boomers would have wanted to slow down. So I tend to buy the largest unit, top floor, extra parking spot, and storage. How could it be so wrong? Lol. You're not so wrong. I'm talking about the stuff that I'm talking about is pre-sale condos in dense urban areas that are serviced by public transit. Your renters for those tend not to be baby boomers. You know, if you're going to say like Parksville or places where it's a retirement community, yes, get a parking spot, get the storage, all that stuff. But I think for in my experience, investors have done the best with simple, small, inexpensive, because there's always the biggest market for that, because they tend to be the least expensive things on the market when they go to be resold. And there's always demand for those. Basically, the way to look at a real estate market is like a pyramid. There's more people at the bottom than there are at the top. So the closer you are to the bottom, the bigger the market you have when you go to sell your property. I hope that answers your question. And for everybody here, feel free to reach out to both Christian and I after this, and we can answer all your questions in detail. Faroon had a question on the Langford area. I love Langford. Langford has tons of great inexpensive options. It's a new developing suburban area of Victoria. It's actually become its own municipality or own district on its own, separate from Victoria. Lots of good pre-sale options, very inexpensive compared to Victoria. Lots of new product. It's fantastic. I'm a big fan. And again, I've got somebody great in Langford and Victoria. So if you need more help and more detail on that, I can introduce them. Olajide, we mentioned your question. And then Tim, do current pre-sale prices reflect today or the future market around completion? That's a very good question. It really depends on the market, and it depends on where it is and what it is. Sometimes in extended periods of rising markets, you get developers asking for tomorrow's pricing, and it can be irksome. You particularly get that in downtown Vancouver and in other areas. But in the Fraser Valley and in other places that aren't downtown Vancouver and the sort of west side of Vancouver, pre-sales are more expensive than existing properties, but there's not a huge premium for the pre-sales like you do see in areas like downtown Vancouver. So it really depends. Now, if you want to avoid that, I can help you with that, or we can help you with that, myself and my colleagues, because we can do an analysis on the property to give you an idea of what it's worth. You also mentioned crystal ball. Do you anticipate better incentives this fall, spring 2024 as a result of increased inflation? I've heard this prediction, but wonder if low supply will allow that. I don't think it will. I think the best incentives came basically last quarter of last year. We're starting to see projects sell out again. Maybe if interest rates go up, then yes, you may see incentives. But like, for example, Unity and Langley just sold out like that. So I don't know. I'm not sure. Kai had a question. Do condo buildings in the Okanagan region tend to allow Airbnb rentals? Yes, they do. Socana, and I've messaged him and everybody on this. Socana currently selling tonight and tomorrow allows for this, and there's others coming.
Yeah.
Go ahead. You take this one.
Can I get financing approval from today? Do I need to get requalified again by completion? The only thing about financing approval from today is, of course, you're going to have to keep essentially renewing it all the way. But what Mike said is it's just a way of figuring out what you could afford if you are completing it today. But yes, when it completes, you have to do it again because the rates will have changed, and they want to make sure that your job hasn't changed. Maybe it's gone down. Hopefully it's gone up in how much you could qualify for.
One thing I wanted to mention though, and sorry to interrupt, Christian, is you can get rate holds that will go until the completion. The only thing is there's two things. One is typically they're offered by the bank that's financing the pre-sale project. So if RBC is financed the project, then RBC often will say, look, we will guarantee X rate until completion. So that's a really nice thing. The only thing is those rates tend to be 1 or 2% higher than what you're going to get in the here and now in the market. But I suggest getting those because it's like an insurance policy. Because if, heaven forbid, interest rates spike and, maybe you've got a 7% mortgage that's held from today for 3 years, that seems high now, but you never know. In 3 years, I don't think it's going to happen. But that might be a good idea. So the nice thing about all these pre-approvals, pre-qualification, all these pre-approvals is they don't cost you any money, and it doesn't cost you any money, and it's, the way I look at it, cheap insurance. And then Dave also said, considering upcoming recession, I don't know if that's happening, quite frankly. Would make sense to long-term completion of 3 to 4 years versus shorter completion. You want to get the longest completion you can get. That's where I would look for. But the key is make sure you talk to your financial planner, talk to your accountant, understand what you can afford, understand what you can afford at higher rates, understand what you can afford if something changes, because it's, again, safety first. We don't want anybody to have any issues or unpleasant surprises.
Mike, I want to pick your brain. Longest completion possible. Give me your reasoning why.
Say again. Longest completion possible is because you don't pay more. You're not paying interest. You're not paying a mortgage. And if inflation continues to rise, the longer you're waiting, the more that increases in value, the more your rental rates go up, and the more chance those interest rates are going to go down. Because I think interest rates are going to go down. Bank of Canada and all the major industrial companies, central banks, have declared war on are declaring war on inflation. And if they don't beat inflation, bad things are going to happen, and they don't want to have bad things happen. And they have beat inflation in the past, doing pretty harsh things, and we're starting to see a little of that. But inflation will be beaten.
Sure, I like Raul's question. I'm going to read it for you, okay, Mike?
Yes, sir.
Can you talk about how to choose projects that will complete on time and have the quality of building that an investor is buying into? In other words, how do we filter the good developers from the bad apples?
Yeah, you know what that is? It's going to be the developers who are local developers who've been building for a long period of time. Ani, Bosa, West Bank, Anthem, Concert, all the big locals that you've all heard of. Those are the guys, and those are the people, I should say, sorry. Those are the people that are going to be able to complete on time, because they do it all the time. They know how to avoid the delays. They know how to, avoid the pitfalls. So that's basically what it is.
The next one
you're going to pay, you'll pay more for their product. That's
how do you
Pacific included? Sorry.
How do you protect against builders who run into financial difficulty due to higher construction costs and holding costs and cannot complete the project?
You know what I'm going to do is I'm going to share an article on REDMA, Real Estate Development and Marketing Act, and basically it talks about all that stuff. Your deposits are held in a trust account when you buy a pre-sale condo, and they are. I'll share the article in the chat thread. But yeah, basically, your deposits are held in a trust account, and they cannot be, if the project is not completed on time, if the project is not completed by a certain date, you get your deposits back. So I wouldn't be concerned about that. And there is also the regulator BCFSA. And BCFSA basically has the power to go after these developers who don't do what they're supposed to do. So I wouldn't worry about that so much. But again, if you want to avoid that kind of issue, just go with the big developers and the good ones. And Coromandel, that's an unfortunate situation, but their deposits are in trust accounts, and they'll get their deposits back.
Yeah, I think before I answer my Mexico question, you feel this one. Can developers increase your purchase price based on their higher completion costs?
Only if they have it in the contract, and you own 99.9% of pre-sale contracts don't have that in the contract. There's only 1 or 2 out in the valley. They were sort of low, not very well-known developers doing that sort of stuff, but it's very
rare.
Yeah, it's very rare. Sorry.
Okay. All right. I'll field mine. Christian mentioned Mexico. What is the play there in Airbnb? So when we look at especially, we deal with so many investors, and of course we encourage that they diversify. But this was actually one of the things that I personally kind of spearheaded. So I'm actually flying to Mexico next month to look at a couple of Airbnb developments. I actually have some Canadian contacts who, of course, have connections there. With the realtors down there. And what it is I would not, the only downside is I would not recommend ever trying to get financing through Mexico, just because it's too complex and it's very expensive and the rates are very expensive. So the play down there would be if you had a line of credit or if you had cash. So you can get, Airbnb 2-bedroom condos if you're going, a fairly really resort town, Cabo, Cancun, places like that. These things are, anywhere from north of 300 for a cheap one, but that's US. 300 US for a cheap one, but you can get things that aren't too bad. But these things Airbnb really nicely. And the other thing is you can also use it, and the time that what I'm thinking if it's corporate. So with corporate dollars, I like the idea of creating something that creates cash flow, but you're using corporate dollars to do it. If you're sitting on this type of cash, if you could use a line of credit, even better, because then you're just keeping everything inside of Canada. There's several more layers of rules because of you technically cannot buy the property yourself. You have to create a trust in order to do that. If the numbers work, the numbers work. This is something that a lot of my clients are getting more into for a diversification strategy. Plus, they like the idea of owning a property in a place that they like to vacation to anyway, because there is some tax deductions on the Canadian side that potentially might work. Especially if it's a revenue generating property, if you had a corporation that was doing it. So I don't want to misstep and accidentally say something that's actually incorrect. Usually what I do is, again, working with my team, we would set you up with a cross-border accountant who understands what it's like to invest in the US or in Mexico. Canada is an absolutely fantastic place, but sometimes people, they want to flow out like people own in Hawaii. I think Hawaii is too expensive now. I think we kind of missed the boat on Hawaii, but there are other properties in Arizona. I myself own property in Nevada. Mexico is a place that I'm looking at on behalf of myself as well as some others. So if you were wanting to have more information, there's my contact information. We can get in touch. Okay. Okay. How many days a year can I expect to rent an Airbnb in Mexico? Right now, just a really quick, fast and dirty number, anywhere from 65 to 75% occupancy, and then run something like $160 US per night, depending on the product. But that's one really quick way. Property tax is much cheaper out there. So there's a bunch of layers that are more complex and a bunch of layers that are much easier to deal with as well. And you definitely want a property management team to take care of all of that. Sometimes property management teams here in Canada are somewhere between 20 and 30%. Down there is probably closer to 15%. So that's also an added bonus. Okay. Mike, there's a question here from Peter. Getting the deposit back still. Okay. So
I've been answering a lot of these in typing, but yeah, basically, getting the deposit back still means you've lost the potential gain if the project actually finishes and you take, if the project actually finishes and you take possession. Yeah, so if a project doesn't go forward, you get your deposit back because it's held in a trust account. There's that article that I shared on Redma. It talks about the big threes when it comes to pre-sales. That's your deposit's held in trust. You get a 7-day rescission period where you can kill the deal for any reason. And then third, where you receive a disclosure statement, which is a detailed document allowing you to make an informed decision on a purchase. But yeah, if the project doesn't go forward, you do get your deposit back. I've had that happen to me personally. I visited a project in Squamish like 15 years ago, and it didn't go forward because of the financial crisis. And I got my deposit back, but it was only held for about 8 months. So yeah, that's the thing to think about is when you're buying pre-sale condos, when you're investing in real estate, there is risk. It's not like the stock market where you can lose everything, but there will be opportunity costs if your project doesn't complete. But again, like I said in the chat, if you invest with a reputable large developer that is established here in Vancouver, the chance of these sorts of things happening is extremely low, like infinitesimally low. I've never had a non-completion of one of the big mainstream developers here in the Vancouver area, including during the financial crisis. There was maybe some projects canceled during the financial crisis, but like nothing got canceled over COVID. It's all usually marginal players that have the cancellations or don't.
Yeah. And as we wrap up with the final round of questions, if anyone has a final question, I think one thing to highlight is Mike's a fairly smart, very, very well established, sharp guy, as am I.
Too
Both of
kind,
us,
thank you.
both of us invest in real estate. Both of us diversify where we invest, and we don't just invest in one project. So I think I know the big push that I'm trying to do with people is saying, if you like the idea of real estate, you really should be switching your strategy. And I believe that strategy is buying multiple properties consistently. And I think in the same way that we're constantly putting multiples amount of money into the stock market, we should be now diversifying and saying, okay, this year I'm going to do this pre-construction. Within 2 more years, I'm going to do another investment. It could be a pre-construction, it might not be, but this idea, in the same way that people who invest regularly in the stock market, people should be investing regularly in the real estate market. But the big challenge is, are you working with the right team? Are you working with the right people who can show you those opportunities? Are you working with, somebody who can integrate this with the other areas? Because Mike can absolutely sell and show you all of this plethora of opportunities, but me and my team could also analyze it and work together with Mike's team to figure out, is it appropriate? Mike used the word safety. We believe in the same thing. I would never, ever encourage any of my clients to do anything that might put them in jeopardy, which is why I tell you to not rely your entire financial life in retirement into the stock market. That it is going to be in jeopardy. You want a diversification. No more than 35-40% exposure to stock market, but let's get some solid cash flowing real estate making up at least a third of this. Anyway, Mike, I think I'm going to slowly wrap it up now.
Sure.
Thank you everybody for joining. This was recorded. My assistant will be sending you the recording so you could review it, or please share it with family members or anybody who's thinking of doing this. Just because I think it's a fantastic new way of thinking about investing. I think it's I think everything that Mike has said today is bang on. I cannot see any of the math or any of the economics saying that a pre-construction will be worth less in 2 to 3 to 4 to 5 years than it is worth right now. Whereas I can with great confidence say certain other assets that you might be investing in might be worth less in 3 or 4 or 5 years. And even if it's not worth less and it just stays flat, remember, inflation will erode it. Inflation will take care of that. Whereas
inflation does that to cash too.
Yeah, inflation makes real estate go up, not down. So with that, thank you guys for joining. We hope to hear from you guys soon. And Mike, thank you for sharing your insights with us as well.
Yeah, thanks guys. Take care, everyone. I really appreciate it. Reach out to Christian and I with any questions you have. Take care, guys, and good night. Thank you.